Imagine waking up tomorrow with zero financial stress. Sounds like a dream, right? Well, it's not as far-fetched as it may seem. Stick around because today we're going to break down 10 golden money rules that can propel you towards remarkable financial success. Whether you're just beginning your financial journey or looking to refine your financial strategy, these rules are absolute game changers. Welcome back to Ideal Learning, your go-to source for transforming financial dreams into achievable realities. In today's episode, we dive deep into the 10 crucial money rules that everyone should know to ensure a secure financial future. If you find this video useful, please show your support by liking, subscribing, and hitting the bell icon to stay updated with our latest content. 1. Rule of emergency fund. Build your safety net. First up, let's tackle a foundational element of financial security, the emergency fund. Now, why is having an emergency fund so critical? Well, life is full of surprises. Some surprises are great, like an unexpected gift, but others, not so much. Imagine suddenly facing a job loss or a medical emergency, or discovering that your roof is leaking during a storm. Scenarios like these are stressful, but they can be less daunting with a financial cushion. So, how much should you save? Aim for at least 3 to 6 months worth of living expenses. This isn't just a random number. It's designed to give you enough time to recover from setbacks without derailing your finances. This fund acts like a financial buffer, absorbing the shock of life's surprises, allowing you to focus on solving these issues without the added stress of financial instability. Start small if you need to. Saving even a tiny portion of your paycheck can build up over time. 2. Rule of budgeting. Know your numbers. Next on our list is budgeting. And let's clear something up right away. Budgeting isn't just about pinching pennies or tracking every single expense, though that can be part of it. It's really about understanding the flow of your money, where it comes from and where it goes. This knowledge is powerful. It lets you make smarter decisions about how to allocate your funds. Creating a budget helps you see the big picture. It puts you in control, rather than letting your spending habits control you. Whether you're planning for big future expenses, like buying a house or funding an education, or just ensuring you can take a nice vacation without going into debt, a good budget acts as your roadmap. It helps you plan, prioritize, and focus on your financial goals. Remember, a budget doesn't restrict you, it empowers you, giving you freedom and confidence to manage your finances effectively. 3. Rule of debt management. Avoid the debt trap. Debt. It can be your leverage or your downfall. Let's talk about managing it wisely. First, target those high-interest debts. I'm talking about credit cards, payday loans, anything with steep interest rates that can climb quickly. These are the debts that pull you down fast, demanding more than their fair share of your income. Make a plan to pay these off as swiftly as possible. Once you've handled the high-interest debts, shift your focus to the more manageable ones, like your student loans or your mortgage. These usually have lower interest rates and longer terms, which means they're not as aggressive, but should still be approached with a strategic repayment plan. The key takeaway? The less debt you carry, the more of your own money stays in your pocket, available to push you towards those bigger financial goals. It's not just about clearing the balances, it's about regaining control and using your income to build your future, not just settle your past. 4. Rule of investing. Make your money work for you. Think investing is only for the rich? Think again. Investing is a must for everyone. And here's how you can get started. First, if the idea of investing seems overwhelming, just start small. There's no need to dive in with large sums. The important part is to start. You can invest in mutual funds with relatively small amounts of money, or try out apps that round up your change into investment accounts. Diversification is your next step. Spread your investments across different assets, stocks for growth, bonds for stability, and real estate for long-term returns. This strategy helps manage risk and provides a balanced approach, which is crucial for building a resilient investment portfolio. Remember, the goal here isn't quick cash. It's about setting up a steady, reliable growth of wealth over time. Regular investments, even in small amounts, can grow significantly thanks to the magic of compounding interest. So make your money work for you and watch your financial health strengthen day by day, year by year. 5. Rule of retirement. Planning. Prepare for the future. When it comes to retirement, age is just a number. Whether you're 20 or 50, it's never too early or too late to start planning. But here's the catch. The earlier you start, the better off you'll be. Why? It's all about the magic of compound interest. This is how your money can grow exponentially over time. Here's how you can start. First, look into retirement accounts like an IRA, especially those offered by your employer. Many employers offer a match to your contributions, which is essentially free money. Don't leave it on the table. Think about this. If you start saving $200 a month at 25 with an average growth rate of 6% per year, by the time you hit 65, you could have over $400,000 saved up. Now, if you start at 35, you'd need to save about $400 a month to reach that same goal. Starting early doesn't just ease your burden, it amplifies your end results massively. So grab any opportunity to contribute to these accounts and watch your future self thank you. 6. Rule of insurance. Protect your assets. Let's shift gears to something less exciting yet undeniably crucial: insurance. Think of insurance as your financial safety net. It's there to catch you when life throws you off balance. Whether it's health, life, auto, or home insurance, having the right coverage is essential. Health insurance can prevent a medical emergency from turning into a financial catastrophe. Life insurance provides for your loved ones in your absence. Auto insurance keeps you covered on the roads, and home insurance protects your biggest asset, your home. But here's the key. Make sure you're not just insured, but adequately insured. Underinsurance can leave you just as vulnerable as having no insurance at all. Review your policies, ensure your coverage meets your current lifestyle, and adjust as necessary. Remember, while paying insurance premiums might not be thrilling, the peace of mind it brings certainly is. It's about making small investments in your present to protect your massive investments in your future. 7. Rule of credit. Health. Keep good credit scores. Let's talk about your credit health. Why is a good credit score so important? Well, it's simple. A high credit score can help you secure loans and mortgages at better interest rates, which means you pay less over time. But how do you maintain or even improve your credit score? First, always pay your bills on time. Late payments can seriously hurt your credit score. Second, keep your credit card balances low. High balances relative to your credit limit can be seen as risky behavior by lenders. And lastly, avoid unnecessary credit applications. Each application can temporarily lower your score, so only apply for new credit when absolutely necessary. By following these steps, you're not just maintaining your credit score, you're building your financial reputation. 8. Rule of smart spending. Spend less than you earn. Moving on to a rule that sounds deceptively simple: spend less than you earn. This is the cornerstone of accumulating wealth. It might be tempting to upgrade your lifestyle when you get a raise or bonus, but that's exactly what can hinder your financial growth. To avoid falling into this trap, prioritize saving over spending. Make a habit of setting aside a portion of your income before you spend on anything else. Whether it's into a savings account, investment fund, or even a retirement plan, always pay yourself first. Living within your means isn't about restricting yourself. It's about making strategic choices now to ensure your financial security and freedom in the future. 9. Rule of financial education. Keep learning. Let's talk about something that never goes out of style. Learning. Financial education is not a set it and forget it kind of deal. It's a lifelong journey. So, how do you keep yourself financially educated? First, stay informed. Keep up with the latest financial news and trends. Whether it's changes in the economy, new financial tools, or investment strategies, understanding these can significantly influence your financial decisions. Next, bury yourself in books. There's a wealth of knowledge in books covering budgeting, investing, saving, and more. These resources can provide you with new insights and reinforce your existing knowledge. And don't forget about courses. Nowadays, there are numerous online platforms offering courses that range from basic financial literacy to advanced investment strategies. These courses can offer structured learning and direct access to experts. So why bother with all this? Because the more you know, the better your decisions will be. Financial knowledge isn't just power, it's profit. 10. Rule of giving back. The importance of philanthropy. And finally, let's talk about the heart of financial success, giving back. You've worked hard, managed your finances well, and maybe even accumulated wealth. What's next? Consider sharing a portion of your success with others. Supporting charitable causes is not only about helping those in need, but also about enriching your own life. When you give, you're not just helping to solve societal problems, but you're also gaining personal fulfillment. Knowing you're making a tangible difference can add a meaningful layer to your life. Plus, there's also a practical benefit: tax deductions. Many charitable donations are tax deductible, which can reduce your taxable income. But remember, the true essence of philanthropy isn't found in the tax benefits. It's in the joy and change it brings to the world. As we strive for financial success, let's not forget the profound impact we can have through generosity. After all, true wealth is measured not by what you gather, but by what you scatter. Conclusion. All right. We've just gone through the 10 critical money rules that can guide you to financial success. By implementing these strategies, you're not just saving money, you're building a foundation that will last a lifetime. Now, I'm curious, out of the rules we discussed today, which one resonated with you the most? Drop your thoughts in the comments section below. Thanks for tuning in, and I can't wait to see you in our next video. Before you go, remember to hit that like button, subscribe to our channel, and share this video with anyone who might find these financial tips helpful. Your support is what keeps us going and helps us bring more useful content straight to you. So, don't be shy. Like, subscribe, and share today.